The- Uh, Good morning, everyone, for all of you who have joined from UK, and good afternoon to our guests from India. Thank you for taking your time off from other webinars and joining us for an hour or so of your fun. Hope we can keep you as engaged as Sir Attenborough. I am Kishore Achari. I am part of the India group of Moore Kingston Smith. I'm based in Gurgaon. My colleague Bharat Rampal and I work very closely with Indian companies who are looking for the support for UK market entry and growth. We do so in partnership with our friends with the Department from International Trade and London and Partners. Thank you for all your support, guys. Last year has been particularly eventful year for both of our countries. Looking just as a positive aspects of the developments, UK has recovered from the uncertainty around its relationship with EU. That's a good thing, but also the UK Prime Minister has recovered. Indian economy is probably going through its weakest growth phase in over a decade, as quoted by several rating agencies. But the situation could have been far worse if we hadn't isolated ourselves and locked down our borders any later. Fortunately, we haven't seen as many case instances of death with the coronavirus, considering our population and the havoc the disease has been creating in other countries. Uh, After a lockdown of all over a month, Prime Minister Narendra Modi has over the weekend announced of continuing the lockdown for another 2 weeks and easing the restrictions in a phased manner. This has been agreed and sort of acknowledged by all the industry associations and experts, and they think that this would ease the pressure on the economic slowdown that we've been witnessing. Both the governments have announced a series of measures as part of their stimulus package to ease some of the pain felt by a lot of businesses in the respective countries. Today, we'll discuss some of these measures announced by the UK government and the support that is available. I would like, I would now like to introduce you to our speakers for today, who will take you to the proceedings of the day. Firstly, a very warm welcome to our immigration partners from Charles Douglas Solicitors Mayfair, Elena Serlina, who is the solicitor and also the head of immigration, and her colleague David Winnie, who is the solicitor at CDS Mayfair. From Moore Kingston Smith, we have Paul Winterfeld, Director of Corporate Finance, and Tim Stowell, Head of Tax Practice. Now, the areas that we would cover today are the furlough system, a scheme announced by the UK government, and following that, we'll cover some of the immigration concerns that the Tier 2 sponsors have been facing. Follow it up with the grants and other measures announced by the government, and uh, Paul will cover coronavirus, a business interruption loan scheme, and other bounce back loan and future fund. Uh, Following that, we'll have some Q&A with all the participants. But just one thing, rule for housekeeping. Before we start, all the members are on mute and the video is disabled for all of you. You will only see and hear us, and you will not be able to speak to us directly. I would encourage everyone though to send in your questions in the chat box. You will see that at the bottom of your screen. Uh, all the questions are anonymized and the panelists will try to weave in the answers while they're going through the slides. If you think your queries remain unanswered or if you have more questions, please email them to me and I will ensure that the panelists can revert back to you directly. So without further ado, I would like to request the key ingredient of our Indian group masala, Tim Stowell, to take over.
Thanks, Kishore. That's a very kind introduction. So I'm going to start on a topic which will be familiar to quite a lot of the attendees of this call, which is the UK's furlough scheme. I'm going to run through the main conditions and aspects of the scheme, but with a particular steer on the parts which I found relevant to our Indian client base. So I'll run through that. As Kishore says, do ask questions as we go. We'll either stop to deal with the questions after each session or pick them up at the end. The chat box is just the speech bubble. Hopefully you can see that at the bottom of your screen. So the coronavirus job retention scheme, also referred to as a furlough scheme, was introduced to try to encourage UK employers, and that UK employers would include UK subsidiaries and UK branches of overseas companies, try to encourage those employers to keep their employees on their books rather than make their employees redundant. That means that the government has to help those employers meet the salary costs that they're going to incur during this period when the economy has ground pretty much to a halt. The scheme it started on the 1st of March 2020. It was announced on the 19th of March, but it was effectively backdated. And it was originally going to run till the end of May 2020, but it's been extended to the 30th of June. So at the moment, the scheme, it's up in the air whether it's going to be extended beyond the 30th of June. My own feeling is it will be, but maybe not for all industries. It may be those industries which are greater impacted by the lockdown will continue to be able to benefit, whilst those that are more prepared to work remotely may lose the benefit of this scheme. However, we will find out whether the scheme is going to be extended, normally with 45 days notice. And the reason for that is if large employers want to commence a redundancy consultation, they need to do so 45 days before they make their first redundancy. So the extension to the 30th of June was announced exactly 45 days before the original end date of the 31st of May. So it looks like about the 18th or 19th of this month, we'll find out whether the furlough scheme is going to be extended again. Just to give you a feel for the scale of this scheme, at the moment the claims have been capable of being made for just over a week now. 800,000, more than 800,000 employers have made claims for 6.3 million employees. Now, on an India scale, 6.3 million employees may not feel like very many, but for the UK, which has a population of 70, 80 million people, that is a big proportion of the workforce. So an £8 billion so far has been claimed by UK employers. I think on the news this morning, they said the government was meeting nearly a quarter of all employment costs in the UK at the moment. So this is a very expensive scheme to the UK government, which is why it won't continue indefinitely. To qualify for the scheme that allows the government to help meet the costs of your wages, you as a UK employer must have had a PAYE scheme, so a TDS scheme, a tax deduction at source scheme for your employees on or before the 19th of March 2020. If you've been in the UK for a little while, then that's almost certainly going to be the case. You must have a UK bank account. Again, if you're in the UK, you probably need that for your VAT and immigration purposes anyway. If you don't have a UK bank account, if you've been surviving only with a non-UK bank account, you'll need to open one now in order to claim under this scheme. And you must be enrolled for online PAYE. This is the portal through which you make the claim, is all done through an online portal, which requires you to register for that, or for you to have an agent. So if you have a payroll agent, Moore Kingston Smith, for example, they may be able to do this for you. Now, if you can't, I would have thought with this audience, you would all have access to computers, most of the audience being in software services. But if for some reason you can't make the claim with online services, you can make the claim over the telephone, but only for up to 15 employees. And it's a much more cumbersome and time-consuming way of doing it. The only employees who are eligible for the grant, or it's the employer that's claiming the grant on behalf of its employees, are employees who were included in a payroll submission before the 19th of March 2020. So by payroll submission, that normally means they've been paid a salary before the 19th of March. Now, because mostly in the UK, payroll is a monthly process, anybody who joined before the 19th of March, joined your organisation before the 19th of March, probably wasn't in a payroll submission before the 19th of March, because that would not have happened until their pay date at the end of the month. So really the employees you can include in this scheme are likely only to be those who were paid in February 2020. If you're including employees in this scheme, you must notify the employee in writing that they've been furloughed. I'll come on to the meaning of furlough in a moment. And there's lots of template letters. We can produce one for you bespoke, but in terms of keeping your costs down, there are lots of template letters available. I've given the link to one on the ACAS website, which is a body intended to help on employment matters. So that's a letter that must be used where you furlough your employees you want to include in this scheme. So if you have an employee that you want to claim the grant for and you furlough them, that employee must provide no services whatsoever to you as their employer. And that's being interpreted very, very broadly at the moment. They can do absolutely nothing that constitutes a service being provided. So we had a query from one client about whether an employee could bring some overdue timesheets up to date, and we said, well, look, strictly within the letter of the regulations, they probably can't, because the completion of those overdue timesheets is a service to their employer. Similarly, they can't generate any income for their employer directly or indirectly, so they can't go off and do any work that enables their employer to raise an invoice. They can do voluntary work, and that's not voluntary work for you as their employer, that's voluntary work for charitable organisations or the NHS, and they can carry out training. So if you wish them to improve their own work skills, then they can sit and do home study, but not if that constitutes providing a service to the employer. The query or the situation that's come up most often in dealing with the Indian businesses I look after is clients, your UK clients, have cancelled their projects, and you've got a workforce which is on the bench in the UK now because flights have been cancelled and they can't get back to India, which is where we'd rather they were, because they're a lower cost overhead there. That, I think, suits the concept of being furloughed, because if the project has been cancelled, the employees are sitting at home doing nothing. Although the scheme was announced on the 19th of March, it's backdated to the 1st of March. So if those circumstances exist from the 1st of March, that a project was cancelled and your employees are sitting there doing nothing, unable to fly back to India, then I think you have grounds for claiming that these employees have been furloughed and can claim the grant from the 1st of March. The current approach from government is to pay now and ask questions later. So we will expect the tax authority, HM Revenue and Customs, to come in and audit these claims in years to come. So the thing that they're really going to be checking is that your employees who were included in the grant didn't do any work for you. So you need to find some way of retaining evidence of that, and that might be cutting them off from the email system. You'd need to think within your own organisation what evidence you can keep that they were doing no work. To make a claim for an employee for the grant, the furlough period must be at least 3 weeks or 21 consecutive days per employee. So if you furlough an employee for just 1 week, that's fine. You can furlough them and ask them to do no work, but you will not be entitled to any grant from government for that period. Now, this is where we get into some of the arithmetic, and apologies for the detail. We will cover it at quite a high level, but the amount of grant that can be claimed is equal to the lower of 80% of what's called the reference salary. I'll come on to what that means in a moment, or £2,500 a month. So if somebody's on a salary of £37,500, 80% of £37,500 a year is £2,500 a month. Now, Elena will correct me if I'm wrong, but I think the sensitive salary level for Tier 2 ICT visas is in excess of £37,500. It's a 40,000, 41,000. So 80% of that would exceed the £2,500 a month. So the grant claim would be capped at £2,500 per month per employee. Any amount that you receive for this element of the grant must be paid in full to the employee. You cannot retain that as a business as part of your profits, and it must be paid through the payroll, so the normal tax and national insurance deductions will be made. Along with the grant of £2,500, the government will also pay you the associated employer's national insurance, although if that national insurance is not being paid because your employees are eligible for the 52-week exemption, then that's not claimable, and also any associated employer pension contribution at the minimum level, at the 3% level. But again, secondees generally are not in the auto-enrolment pension scheme because they're not ordinarily working in the UK. The reference salary, so in the event that you're not paying somebody more than 37,500, we need to calculate the reference salary in order to work out the level of grant due. Now, for employees who are fixed rate employees, they receive the same amount every month. The reference salary will be their salary paid through the February 2020 payroll. It doesn't matter if you've reduced their salary after February 2020, the calculation is still applied to the February 2020 payroll. If you've got non-fixed rate employees, so employees where their salary might vary from month to month, it's either going to be, the reference salary will either be their the average earnings for the 2019-20 tax year, the year ended 31st of March 2020, or you can track it month by month. So in May 2020 would look back at the May 2019 salary. You'd need to establish whether your employees were fixed rate employees or non-fixed rate in order to do that arithmetic. For earnings, you would include anything that the employee is contractually entitled to. So if there's any element of discretion, you have to ignore it. But you would include the regular wages, any non-discretionary overtime, so any overtime they're contractually entitled to, any contractual bonuses and any contractual commission payments. You don't include in the earnings for working out what you're applying the 80% to anything that's discretionary. So if there's a discretionary bonus or any discretionary commission due, you wouldn't include any benefits in kind. So if there's any medical insurance or that sort of thing. If there's a salary sacrifice scheme where the employees agreed to reduce their salary in exchange for pension contributions, for example, you can only use the reduced salary for this calculation. And if this will apply to some people on this seminar, if you've got an agreed scale rate, those who've got longer memories will remember this being called the dispensation. But if you've got an agreed scale rate towards living expenses, which is paid through the payroll, and that's a tax-free payment, doesn't suffer tax or national insurance for employees on temporary secondment to the UK, that amount must be ignored if it's being paid tax-free through the payroll when you look at the salary. So taking my earlier example, if somebody's on a minimum tier 2 intercompany transfer visa, might be earning £41,000. If 18,000 of that 41,000 is their scale rate payment, it's the lower amount, whatever 41 less 18 is 23,000 that you would apply the 80% to. So that will trip up a few employers, but that's only if the scale rate's going through the payroll. It's not as simple as just telling your employees that they're being furloughed. Employment law in the UK does protect employees' rights. So first of all, you would need to check the contract. Do you have any clause in the contract that allows you to reduce their salary or have a layoff period? That's unusual these days, so that clause is unlikely to be there. So you either need your employees to consent to the changes, which might be to earn a reduced amount of salary and to be furloughed, or if the employees won't consent to it, commence a consultation. Our experience has been most employees are consenting to this if you have a full and frank conversation with them, because the alternative is consultation, which will in all likelihood lead to redundancy. So if you do obtain consent from your employees to change their contractual terms and conditions and to be furloughed and to go on to perhaps 80% of their earnings, then you would need to get their written agreement to that change of terms and conditions. If you do have to go into a consultation period, then the period in which you have to, or the law says you should give for consulting, depends on the number of employees you're considering to be furloughed. So if you're right at the top end, more than 100 employees being furloughed, then the consultation period is 45 days. And that goes back to my earlier comment about the government giving 45 days notice to any extension in the furlough period. If you've got fewer than 20 employees who are being considered for being furloughed, then just a reasonable period, which ordinarily would be 2 weeks, but could be shorter in these circumstances. But anything that requires consultation, definitely take employment law advice, and we can help with that. When your employees are on furlough, they're still your employees. Do not issue a P45. They continue to have all their employment rights and benefit from the Working Time Directive. They continue to accrue holidays. So if your employees, once they're furloughed, are going to come back into working in the UK, you may find they come back into working and have a full year's holiday entitlement to take in just a few months. And any holiday the employees take whilst they're on furlough must be paid at the full salary rate, not the furlough salary rate. So bear that in mind. Friday of this week is the May bank holiday. If what happens is that forms part of the holiday period of your employees, that must be paid at the full salary, not any reduced furlough salary. So that will need to be picked up in your payroll calculations. When you make a claim, as I said, it's all online, so either you or your agent will need access to the PAYE online services. You select the period that you want to make the claim for. So if you're making the claim today, you could go all the way back to the 1st of March, and you can end that period anytime within 14 days in the future. So you could take that all the way up to the 19th of May to capture any salary payments you're making in that period. You'll need all of the furloughed employees' names, and then more troubling, the national insurance number. A lot of employees on secondment have delays in getting their national insurance number or may not get one at all. If you don't have national insurance numbers, that does make the claim more difficult, but not impossible. It requires a bit more liaison with HM Revenue and Customs. So life is much easier with a national insurance number, just a bit more difficult without. It's up to you to calculate, or certainly we can do it for you, to calculate the tax, national insurance and pension amounts that you're claiming. And then making the claim, you'll need some basic details about your company, its tax references, bank account details. And our experience so far is the period in which the claims are being paid by the government is 6 working days. We've actually seen them come out slightly quicker. At the beginning, they were coming out in 4 or 5 working days. So it really is a question of the government are paying now, and they will ask questions later.